Hey everyone, this is June from Turning Point Life Investment. Today I'm going to talk a little bit about moving averages. Now, if you don't know already, moving averages are one of my favorite indicators to use. I think you can extrapolate a lot of information just from the moving averages alone. One of the things that I'm going to talk about today is how do you tell strength and momentum by looking at the moving averages. Now, currently I'm looking at the SPY, the ETF for the S&P 500, and currently we are looking at this rally that we've been having. To get a better sense of the current strength and momentum of this rally, what I like to do is zoom in into a smaller time frame. So right now I'm looking at a 6-month daily time frame. I'm going to zoom in into an hourly view. It is always a good idea to kind of go between different time frames, such as long term, intermediate term, and short term. Okay, so that way you get a nice, almost a three-dimensional view of your stock, or at least the market that you're looking at. So right here we have a 60-minute view of the SPY. Looking at this, the first initial leg of the rally, you would notice how pretty strong it was. Notice how far it was from this 20-hour moving average, right? It got pushed pretty far away, so that tells you momentum was pretty strong. And notice how it's able to sustain itself above this 20-hour moving average for quite a long time before it finally came back down and tagged it. Okay, I always use the 20 as a almost like a center line. Prices get pushed away from the 20, but eventually it will have to come back and touch it. So after a brief resting period, once again prices got pushed above, okay, or away from the 20-hour moving average, and notice that it came back down to touch it. But the difference between here and here is that here it wasn't able to sustain itself as above the 20-hour as long of a duration as it did here. Okay, and then after resting again, it managed to push. But notice how the push isn't as far away as it once were compared to this one and the initial one. Okay, and notice also how it only managed to stay above the 20-hour moving average for only maybe a day or so. And then following subsequent pushes aren't as strong, right? They're not as far away from the 20 as, again, this point or even this point. And it's almost starting to hug this 20-hour moving average, kind of like creeping along the moving averages rather than leaping out or jumping above it. Okay, so once again, right, this is telling you it's starting to get a bit exhausted. It also helps to have two moving averages on there. I always use a minimum of two moving averages. The other one I use is a 50, and you can tell the same thing with the 50. Pretty wide, okay, pretty long rally before I touched it, but now the second time around, it's much shorter, and now it's back to retesting that 50 once again. So as you can see recently, or actually today, we have a breakdown of this 20-hour moving average, and that tells you the momentum is starting to slow down towards the upside, and we might have a potential shift towards the downside, especially if it breaks under this 50-hour moving average. So as you can see, there's a lot of information just to extrapolate from looking at the moving averages alone. So imagine if you combine candlesticks, other indicators like stochastic, MACD, and volume, just so much more clues you can get from just looking at the stock alone.